Unlisted shares refers to the equity shares of companies that are not traded on any public stock exchange in India, such as NSE or BSE. These shares belongs to private companies, startups, or even subsidiaries of large corporations that have not yet gone public through an IPO. Unlike listed shares, which are subject to stringent regulations and continuous disclosure requirements from bodies like SEBI, unlisted shares have less regulatory oversight. The trading of unlisted shares typically occurs in the grey market or over the counter (OTC) market, where transactions happens directly between buyers and sellers, often facilitated by specialized brokers. Investors in unlisted shares often seek opportunities for potentially high returns as they can invest in promising companies at an early stage of their growth journey, sometimes at more attractive valuations than what might be available post IPO. However, investing in unlisted shares comes with considerable risks. One of the primary drawbacks is limited liquidity. Unlike listed shares that can be bought or sold instantly, finding a buyer for unlisted shares can be challenging and time consuming. Valuations can also be difficult due to lack of transparent market pricing and limited publicly available financial information about these companies. Investors rely more heavily on due diligence, which can be complex given the less stringent disclosure norms for various companies that are private. Regulatory protection is also lower for unlisted shares compared to their listed counterparts, increasing the risk of fraud or disputes. The holding period for unlisted shares to qualify for a long term capital gain tax benefit in India is 36 months, longer than the 12 months for listed shares. Despite these risks, the allure of investing in potentially next big things before they become widely known attracts a segment of investors, including high net worth individuals, family offices, and increasingly retail investors through specific platforms. It is crucial for investors to conduct thorough research, understand the risk, and ideally work with reputable intermediaries when considering investment in the unlisted space.